Welcome back to TyNance, another week in the stock market. This week the ECB cut interest rates by 25 basis points again, and now Trump is urging Powell to cut interest rates as well, and he's saying that Powell and the Federal Reserve are always late to the game, that they should have cut way sooner, just like the ECB, and because they did not do so, they definitely need to cut now. So the Federal Reserve and Jerome Powell are finding themselves in a very difficult position because they don't know what tariffs will bring, if this will lead to inflation or higher unemployment. And the economy seems to slow down a little bit right now. Next to the slowing down of the economy, inflation is still not near the levels where the Federal Reserve wants it to be. And because tariffs are creating a lot of uncertainty around those numbers, they feel trapped in between cutting and not cutting interest rates. So they find themselves in a very difficult situation. The Federal Reserve is an organization that is independent of the president, and I think that is a good thing. It's a good thing that the Federal Reserve is independent because having low interest rates would be good for any president's term or 4-year term, but that does not necessarily mean it's good for the long term and the economy. So it's good that the Federal Reserve is an independent organization, and maybe it should not be allowed for the president to push the Federal Reserve to do something, as they are an independent organization. But politics, economics, they go hand in hand here. Next to all those things, we had some earnings this week, and two of my companies reported earnings as well, which are LVMH and ASML. So I would like to go through the earnings shortly. First, I dived into the LVMH earnings report, and it says LVMH, the world's leading high-quality products group, recorded revenue of 20.3 billion euros in the first quarter of 2025. 20.3 billion is 2% down from the first quarter of 2024. LVMH showed good resilience and maintained its powerful innovative momentum despite disrupted geopolitical and economic environment. Europe once again achieved growth on a constant consolidation scope and currency basis. The United States saw a slight decline despite a good performance in fashion and leather goods and in watches and jewelry. Japan was down with respect to the first quarter of 2024, which had been boosted by strong growth in Chinese consumer spending in the country. The rest of Asia saw trends comparable to 2024. So all in all, not a big difference if you compare their numbers to 2024. And there's no real growth at the company at the moment, even a small revenue decline. And it seems that the luxury goods sector is in a bit of a slowdown right now. Even though it seems to be in a slowdown, I think this is a really high quality business, and they are just going through such phases. And this is just one of those phases that economic slowdown in luxury goods is happening, and a lot of geopolitical tensions and the economic environment are just not optimal for such a sector right now. But since this is a really high quality business and they still make a lot of money and free cash flow, I am very interested in buying more LVMH shares for a lower price. Next up we have ASML. Just like LVMH, ASML dropped about 7% on their earnings report, which says Q1 total net sales of 7.7 billion euros on gross margin of 54%, which is good and about in line with expectations. Their bookings though came in short at 3.9 billion euros, while 4.9 billion euros was expected. This is one of the reasons the stock was dropping. Next, or in addition, the CEO of ASML commented that tariffs are creating a new uncertainty for both the economy and our potential market demands. So, with bookings down or lower than expected, and the CEO commenting on tariffs bringing uncertainty to the market, those are two good reasons for the stock to drop. Do I mind the stock dropping? No, not really, because I don't really have a built out position just yet. And just like LVMH, I think this is a high quality business that I can now pick up for a lower price. So I will definitely like to pick up some more shares around this price. Now let's get into my results for this week. I am now up to $73,697, but you must take into account that this is mainly because of a lot of deposits I made this week. And if it were not for the deposits, I would actually be down this week. So at least I am losing some of the profits I made before. And that's why you can see that the total P&L is lower than the week before. The only move in the portfolio I made this week was buying 10 shares of Shopify for a price of $83.11 per share. I'm currently holding 50 shares of Shopify with an average price of $72.75. So I had to increase my average price a little bit. Shopify went up quite fast after I bought the first 40 shares, and that's why I was not interested in buying more. But now that the stock price fell a lot, it looks quite interesting to me, and I am willing to buy more Shopify around this price. This is what the portfolio is looking like now. Shopify is now the sixth biggest position. Apart from that, there are no significant changes. That's it for today. Note that this is not financial advice. You can find the full disclaimer in the description. Please like, subscribe, and thank you for watching.